CANSLIM, what it is and how it works will be explained in this video. Are you ready? Okay, first things first, what is CANSLIM? CANSLIM is a stock screening and investment strategy developed by renowned investor William J. O'Neill, the founder of Investors Business Daily IBD. The acronym CANSLIM represents 7 key factors that O'Neill identified as essential for identifying growth stocks with strong potential for significant capital appreciation. His approach combines both fundamental and technical analysis to uncover stocks that have the potential to outperform the market. The strategy is designed to help investors find high-growth stocks at an early stage in their upward trajectory, offering a systematic framework for stock selection and trading. Let's explore the 7 key components of the CANSLIM strategy. The strategy is based on 7 criteria that stand for the following. Let's be attentive. C stands for current quarterly earnings per share EPS. A stands for annual earnings growth. N stands for new products, services, or management. S stands for supply and demand. L stands for leader or laggard. I stands for institutional sponsorship. M stands for market direction. Each of these components plays a specific role in identifying stocks that are poised for growth. We explore each element in detail. The first alphabet, C current quarterly earnings per share, EPS. The C in CANSLIM emphasizes the importance of a stock's most recent quarterly earnings growth. A significant increase in EPS compared to the same quarter in the previous year is a critical factor. O'Neill advocates for companies that show at least a 20% to 25% increase in quarterly EPS. This growth demonstrates the company's ability to generate higher profits in a short time, suggesting strong financial performance. The second alphabet, A annual earnings growth. The A stands for annual earnings growth over the past 3 to 5 years. O'Neill advises that investors focus on companies with consistent and strong long-term earnings growth, ideally at least 25% annually over the past 3 years. This shows that the company is not just experiencing a short-term surge, but has the fundamentals to grow sustainably. The third alphabet, N, new products, services, or management. The N represents innovation and change. O'Neill argues that successful companies are often those introducing new products, services, or management changes that drive growth. A company with a fresh product line or a new CEO can experience a surge in its growth potential, as innovation often creates a competitive advantage. The fourth alphabet, S supply and demand. The S in CANSLIM refers to supply and demand dynamics for the stock. O'Neill advises that investors look for stocks with limited shares outstanding and high demand from buyers. Companies that experience high demand and have a restricted supply of shares tend to see their stock prices rise. The fifth alphabet, L leader or laggard. The L focuses on whether a company is a leader or a laggard in its industry or sector. O'Neill suggests investors focus on market leaders, as these stocks tend to outperform their peers during strong market periods. A leader is typically a company that is outperforming both its industry and the broader market. The sixth alphabet, I institutional sponsorship. The I stands for institutional sponsorship, which refers to the presence of large institutional investors, such as mutual funds, pension funds, and hedge funds, in a company's stock. O'Neill emphasizes that stocks with a strong institutional following are more likely to experience sustained upward price movements. The last alphabet, M market direction. The M represents the overall market direction, which O'Neill believes is critical to the success of any stock. Even the best growth stocks may fail to perform well if the broader market is in a downturn. O'Neill advises using tools like technical analysis, specifically chart patterns, to assess the health and direction of the market. Do you get that? This is interesting, isn't it? In addition, the CANSLIM strategy is a powerful approach for identifying growth stocks with strong potential. By focusing on key factors like earnings growth, market leadership, and innovation, investors can pinpoint companies that are primed for success. While it requires a deep understanding of both fundamental and technical analysis, following the CANSLIM method can help investors build a strong portfolio of high-potential stocks. As with any strategy, however, it's important to remain disciplined, stay informed about market trends, and manage risk effectively. Thanks for joining. Kindly share, like, and subscribe to our platform. See you next time. Bye.